All right. So interestingly, I'm sure that you have seen the first day of the class, and then you already know some of the important foundations before we continue to go ahead. And yes, I must say, forex is something you need to like pay attention to from time to time if you actually really want to catch it up and then make the most of it. You need to like practice, give yourself time to grow. It's not something you're just going to catch and understand fully in 1 hour, in 30 minutes. No, it requires time. And then in the first class, I already laid a very solid foundation on candlesticks. And so you are not new to the charts anymore. You already know what you're seeing in front of you. I also talked about how you can use candlesticks to your advantage. And all of this is actually what people call price action. Okay, your ability to understand candlesticks, how they're formed, and how to use them to make trade decisions is what we understand by price action. Okay, so today, before I go into the details of things I would be sharing, I would first want to establish a sort of like a reminder or just state some facts that you also need to be conscious of when you are trading. All right, so there are like 6 major sessions all over the world, but I think the important ones are just about three of them, only three. That's the Asian session, the London session, and then lastly the New York session. So I would also state that it doesn't mean you can't take trades at any time, right? So long the market is open from Monday to Friday, it doesn't mean you can't take trade at any time. But if you're expecting good volume, you want to trade when there's volume. The Asian session, also referred to as either Japanese or Tokyo session. Yeah, it's the third in terms of the volume or the weight, but I don't trade it. It's up to you to make up your mind if you want to trade it. It doesn't have enough volume. The other two sessions are the London and the New York session. All right. So the London list opens at 8 a.m., in the UK time. The New York session opens 8 a.m. in the UK. If you look at the time, New York session opens, that's about 2 p.m. Nigerian time. So the London, of course, opens at 8 a.m. Nigerian time also. But of course, you need to know because they do all this daylight savings thing, and also anytime they are saving time, it's going to be 9 a.m. Nigerian time. So they'll be an hour ahead. But for the most times, when we and the UK are on the same time frame, it's just the same time. So number one, it helps me as a person because I'm not a nocturnal person. I'm at my best during daytime, so I just want to trade during the daytime. So anywhere I find myself, um, any country you find yourself. Currently, I'm not in Nigeria, but I still use the same time frames to take my trades. I've already been accustomed to them in a way. So yeah, that's it. You can trade any pair within this session, but this is just like the times whereby there is so much volume in the market. That's why I said I should say. What else? For me, I would actually recommend anybody wants to, if you want to be a scalper, you want to, like day trade, just focus on the London and the New York session. You don't need all the sessions to essentially make money. All right. So the next thing I will talk about is the market structure. And this is very, very, very important. You need to pay attention actually. Every chart in the world that you open or pop up can only have three major structures. Like these are the only three things that can be happening in the market. Any chart at all, any chart at all. All right. So once we understand and then we begin to look at the markets from this perspective, it's really, really going to help you stabilize you. And then it keeps your mind, like you're not looking for the wrong thing on every chart. So the first thing you can always see in the market is either there's more buying pressure in the market than selling pressure. Basic principle of economics: when there are more buyers than sellers, what happens in the market is what price would go up. When the price of the commodity is going up, it won't just be a straight line like this. All right. It's usually in this pattern. You could call it zigzag if you like, but I would explain what it means to you. Don't forget, I already said on every chart you open, on the right side is where you find price, all right? And then here you find duration, you find day or time. You find time at the base, and then on your right, you find price. So it means that technically what's happening right here means that with time, because this is time, right? Price is what moving up with time. It doesn't mean that price won't come down, right? There will be times where price would, let me change the pen so you can see what I'm trying to do. There will be times where price will come down, then it will go up again, then it could come down, go up again, come down, and then go up again. This, you will discover that at the end of the day, there's a steady increase in price. There's a successive increase in price. This kind of market is what we look at and we say it's what? An uptrend. Understand this clearly. Write it down if you have to. Draw it out if you have to. How the market moves in an uptrend. Number two, of course, if we have an uptrend, we must be able to also have what we call a downtrend. A downtrend is a seller's market. And then in this situation, what we're having is what? A successive decrease in the price. There's a continuous decrease in price. Based on the law of economics, also, when there's more people selling a commodity, what happens to the price? The price continues to what? To fall. So you can have a scenario like this. So in this also, it doesn't mean there won't be seasons or periods when price would be going up. All right. But what's happening at the end of the day is that there is more selling force than the buying force. So price would go down because price is not going to go down in a steep slope like this. It doesn't happen in reality. Price only go down gradually over time. And when we have this happening in the market, we say what? The market is in a downtrend. Understood? All good. Yeah. So the next possible situation we have in the market is what we refer to as a consolidation. Some people also call it sideways movement. Whatever we call it doesn't really matter. But I'll show you the implication in a minute. Okay, consolidation or sideways movement. And what does this imply? It simply means this is a period when there is no significant increase or decrease in the price in the market. It means that there is almost an equal distribution of power between the buyers and the sellers. And that also because in reality, it's not going to be measured by just a straight line, all right? It's not going to happen this way, even though that's what's happening, but because in reality, it has a different interpretation. So you have a situation like this, where price is going up, going down, going up and down, but it is just within a range. All right, it is just within a range. When we have this kind of situation in the market, we say price is consolidating, or we say what the market structure is consolidating. Now, a quick recap, and what you can do, what you should do, right, in this kind of structure. The first structure I talked about is the uptrend, and I said uptrend, you see that there's more buying power. So the kind of trade you look out for in an uptrend is a buy trade. You look for buying opportunities. You look for buying opportunities. Let that be in your mind every step of the way. It doesn't mean there won't be sell trend, there won't be sell opportunities, but you don't want to keep them as your focus. You make more money buying when the market is trending on the upside, right, than when you're trying to short an uptrending market. It doesn't even actually make any trading sense. Number two. So in a downtrend, obviously, you also want to focus on the sell opportunities. There will be buy opportunities in there, but that's not the core strength of the market. You don't want to waste your time and attention on that, all right? You just want to focus on what? Your sell opportunities. Another thing you need to note is that what? When you're trying to buy, try to do that on what we refer to as support levels. And I would explain that in a minute. Look for your buy opportunities at where? The support levels, and then look for your sell opportunities at the resistance level. Honestly, if you're able to understand this important point that I just talked about on market structure, and then you're able to spot it and discipline enough to stick with this, you have solved about 70% of your trading problem. And I say that without a doubt. In a consolidating market, the kind of trade you want to take is either you don't trade at all, right? You wait for a breakout of the level, all right? No trade. I'll just advise you, don't trade consolidations. Why? Because the market is sloppy. There is no volume either to the buying side or to the selling side. It's just ranging in between. You can either just preferably wait for a breakout, right? Either to the upside or to the downside, and then you choose a spot to trade. This is where most of the traders lose their money, honestly, because they're in profit sometimes, but they want the market to continue to go higher. But the market is in a consolidation. It's not going to break above or beneath that level. And then from maybe you're already up 10, 20 pips or 30 pips in profit, and then price goes back to your entry or even goes back to your stop loss. You know, I see people complain about this situation. Oh, why? I already made 20 pips and then price went to its stop loss. Oh, I already made these pips and then price went back to its stop loss. Many a times you are in a consolidation and then you're failing to pay attention. All right, if you understand me so far, can I get a 1? If you don't, can I get a 2? Awesome. All right, so when you look at this trending market or the trending market, basically, it would always result in a movement like this. Like I said, in an uptrending market, you find this situation. And what is happening in reality is that what the market is creating from this point, this is like the low point in the market, right? But this is a higher low point. Pay attention. A higher low point, all right? This is another what? Higher low point. This is a high point, no doubt, right? But after the market goes down to this higher low point, it would always create what we call a higher high point. That is a high point that is higher than the previous high. What will happen here again? A higher high point. Basically what? A higher point, a high point that is higher than the previous high. What will happen here? It will be higher lows, all right? So in an uptrend, the market creates what we call the highs. Now you see again another reason why you don't want to focus on selling, because the market is in an uptrend. It will be creating highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. On the converse side of things, when the market is, I'm still going to explain this over and over, all right, in different languages, and then you will see the correlation. So in a downtrend, what happens? The market is basically creating lows, all right? So this would be the high point, like the highest point on the chart, and then it will create a lower high point. And then at the base, it's going to create, this is the low point, this is the low point here, and then it will create lower lows. It will continue to create lower lows, lower highs. All right, lower high, lower high. So basically, in the downtrend, what do we see? The market will continue to create lower highs and lower lows, lower highs and lower lows. Yet again, this tells us that what, since the price is expected to go down, your attention should be on what, sell opportunities in a downtrend. But that's not all. I'll quickly talk about support and resistance level. Every time the market is moving, let me use this live chart because that's why I really wanted us to use a live market. I don't like to teach with closed charts. All right, so I would do an illustration first, and then I'll come to the live chart to explain. So this is how price moves in the market. You know, I'm just going to try and okay. All right, so this is just an example, all right? This is just an example, and then I'll show you in reality also. So in an uptrend, price would, of course, be breaking the resistance level. And then those resistance level will be creating support levels. This is what I mean. This, for example, the floor for price is called a support point. This is called a resistance point. That's like the roof. Then when price rejects from the resistance point, the new place price will go to is what we call another support. Obviously, this is also a resistance level right now, but